Welcome to this video on double entry bookkeeping. Just a quick kind of demonstration on how to implement double entry bookkeeping. So very quickly before we start, you should know pearls and how it works. So the P represents purchases, E for expense, A for assets, and as you increase any of these three, it would be a debit. If you increase revenue, liability and sales, it would be on the credit side. The opposite would happen if you decrease the revenue, liability and sales, it would go on the debit side. If you decrease purchase, expense and assets, it would be on the credit side. The only thing that you need to remember, a capital is considered to be a liability because it's something that the business has to pay back to the owner if they make a capital investment. Okay, so we're going to start, I'm just going to demonstrate in particular this question which is on page 61 in your book. So this is 2.2 and the way I would start this question is always just to demonstrate. I would always think about first of all the two accounts the first transaction is going to affect. So on the 1st of August you start putting, so the business started business with £7,400 cash. So that is a capital investment, and as I mentioned before, capital is a liability which has gone up, and therefore that is going to be on the credit side. You have also cash. Now cash, according to Pearls, is an asset. It has gone up, and therefore it's going to be on the debit side. So it's really important that you have a credit and a debit entry for each one of these transactions. So I'm not going to do that for each one of these transactions, just did that one to show you the kind of technique I use in particular before I put them on the T accounts. Okay, so on the T accounts, I have some examples or blank examples of T accounts, and we are going to start putting this information straight into the T accounts. So I'm just going to name this particular T account the general ledger. Okay, so in the general ledger you have all the nominal accounts. So apart from your trade receivables and your trade payable accounts, you should have all the other accounts in here, and that includes your cash and your cash book. So we're going to start with the capital account first of all. Okay, don't forget to label your debits and your credits. And the second account we said is going to be the cash account, and we'll open other accounts as we go along through this question. Okay, so we said that we were going to credit the capital account and we were going to debit the cash account. So let's do that, and make sure you put the date, which is the 1st of August. So the 1st of August. And in terms of your narrative, you always have to put the corresponding name of the account. So this name has to represent whatever the corresponding name of that account is. And the amount was 7,400, and we do the same for this one here, 1st of August, and again we put capital, which is a corresponding name, and we put 7,400. Okay, so that is the first transaction which is done. Okay, so that transaction is now complete. We have two accounts and we have a debit and a credit. Okay, for the second transaction we have cash and bank. So cash is an asset account which has gone down because you've taken the money out of the cash, and therefore that's a credit. The bank is also an asset account which has gone up, and therefore that would be a debit. Okay, so again, doing that kind of stuff is really, really important. So let's put some information on here. So I've already started. by putting the 2nd of August cash £7,000 in here and so forth. Therefore that would be the 2nd of August bank, and that would be £7,000. Okay, so now we have completed the second transaction. Okay, and this is how you basically learn how to practice double entry bookkeeping. It is really important that you try to follow this technique as much as you possibly can. So you buy goods on credit, £410 from J. Watson. So you buy goods, so you have made a purchase, because that's the definition of purchases, is when you buy goods. Okay, so your purchases have gone up, and therefore that's going to be a debit according to Pearls. J. Watson is now a trade payable, i.e. a liability, which has gone up, and therefore that is going to be a credit. Okay, so once you've done this, it becomes easier for you to put the information here. So I need to open a purchase account, goes into the general ledger. Okay, so we said we're going to debit the purchase account. Again, put in the correct date, which is the 4th of August. You put the name of J. Watson. And you put the amount of £410. Okay. Now the next account will have to go into a different ledger. It would have to go into what we call the payable ledger. Okay. Because the payable ledger is a list of all our suppliers that we owe money to, and one of them is J. Watson. Because we haven't paid for the stock that we bought just yet. So again, you put a date, 4th of the 8th. The corresponding name of the account is purchases, and the amount is £410. And again, you have now completed the third transaction of this particular question. Okay, let's move on quickly. So van is an asset which has gone up, and therefore that is going to be a debit. You have paid by check. Check is bank, which is an asset which has also gone up, sorry, gone down, because you paid for that, which is a credit. Okay, so I'm just showing you this, although you don't have to write these down, just so I'm showing the thought process that you need to be going through in your head. So both of these, van and the bank, go in the general ledger. We've already got a bank account, so we can make a start on that. The 5th of August. We'll call it the van account, and the amount was £4,920. We don't have a van account yet, so we need to open a van account, and we'll do that again for the second page of the general ledger. So open the van account, and again the 5th of August, put bank, and we put the amount of 4,920. Okay, so it's really important that you try to follow all the key areas of Pearls. So on the 7th of August, you buy goods for cash for £362. Okay, so if you buy goods, it would be considered as a purchase, and it also comes into your cash account. So let's have a go at doing that. So what's happened to your cash account? Obviously, if you buy goods, the money will be coming out of your cash, which would be a decrease in the asset if you're talking about Pearls. I'm just 7th of 8th, purchases, and the amount is going to be 362. And in your purchase account, you're going to have the 7th of the 8th, you're going to have cash, and the amount is going to be 362. Okay, you can see with every transaction there is a debit, there is a credit, and it's really important that you remember that key rule. Okay, the next one, the 10th. Okay, for the transaction of the 10th of August, you have sold goods on credit for £218 to L less. So L less becomes a trade receivable because this person owes you money and is a customer, and you've made a sale. So you need to open a sale account, which I have done already here, and you put the date and the person that owes you the money, the trade receivable, and the amount. Now the trade receivable has to go into the separate ledger. So I'm just going to make the separate ledger here of the receivable ledger. Open account L list, and like I said, we are going to debit this account because this is an asset. So this person is a trade receivable and is an asset, and the asset has increased, so therefore it's going to go on the debit side. So the 10th of August, sales and £218. Okay, so using pearls is really, really important for every single transaction you do. Think about what part of the pearls it represents. Think about whether it's an increase or a decrease, and that will help you to do that. Okay, so we have now completed the 10th of August. Okay, on the 12th of August, you return some goods to J. Watson. So initially we bought some goods on the 4th of August. Now you're returning some goods to J. Watson. So if you return goods to J. Watson, that would become a purchase return. Okay, so we need to open an account with a purchase return. Another name for this is also called a return outwards. Okay. So, and this is purchase. This comes under actual purchases in pearls. It actually comes as a decrease in purchases. So if you decrease purchases, it's going to go on the credit side. So again, you put the date, which is the 12th of August. Okay, the corresponding account is J. Watson. The amount is £42. Okay, then you need to find your payable ledger. Okay, and in your payable ledger you have J. Watson. And now, because this is a liability account, you owe J. Watson £410, but you've reduced your liability, you've decreased your liability because you owe them less money because you return a certain amount of stock back to them. So on the 12th of the 8th, we put purchase returns for the value of £42. Okay. So it's really important, again, always making that reference to pearls. So we have now completed the 12th of August. You sold goods for cash for £54. Again, this is a cash transaction, so this is going to go straight into your general ledger, both of the accounts. So the two accounts it's going to affect would be the sales account and the cash account. Okay, so let's do the sales account. So your sales have increased by the means of cash for the value of £54. Okay, and in your cash account over here, your cash value has increased, so your asset has increased, so it's going to go on the debit side here. So I'm not sure if I got the right date. Yeah, the 19th of the 8th. We're going to put sales, and the amount is going to be £54. So I have a debit and I have a credit. Again, always checking the transaction, making sure you have a debit and making sure you have a credit is really important. Okay, so the next one is you buy fixtures on credit from Firefighters Limited for £820. Again, we don't have a fixtures account in our general ledger, and we could just open one. There's no problem with opening as many accounts as you need. So we'll open a fixtures account. Okay, fixtures are considered to be a non-current asset. These are kind of the mannequins that you may have in a shop, the shelves that you may have in a shop, and so on. So you have gained more assets, you have increased your assets, so it's going to go on the debit side. Or we're going to call it fire lighters. And the value is £820. Okay, so that's the debit entry. The credit entry is going to go into your payable ledger because you owe firefighters a certain amount of money. So we will put here fire lighters, and because this is a liability account and you've increased your liability, it's going to go on the credit side. Again, the 22nd of August, the corresponding account name is fixtures and the amount is £820. Okay, so we have now completed this transaction here. Okay, F Homes lent us £1,500, paying us money by cheque. Now if you get a loan, they don't actually come under trade payables, they come under the general ledger as a loan, just like getting a loan from a bank. So we'll put both of these in the general ledger because they both would be considered to be part of the general ledger. So if you receive the money by cheque, it would go straight into your bank. Your bank value has increased, your asset has increased, and therefore it's on the debit side. So you put the 24th of August, you put F Homes, okay, and you put the amount 1,500. Okay. And again, I've got no space in this general ledger, so I'm going to have to use the third general ledger sheet. Okay, so I'm going to call this F Homes. In brackets, I'm going to call it a loan account. Okay, and this is a liability account, so you owe F Homes a certain amount of money now. So you put 24th August, you put bank, and you put the amount of 1,500. Okay, so therefore that completes that particular transaction. Okay, we paid Jay Watson his account by cheque of £368. Okay, so we have paid our trade payable of J. Watson. So what do we do here? If you remember, J. Watson is the trade payable, a liability. So we reduce that liability because we have paid off the amount of whatever it was, £368. So the 29th, how do we pay? We paid it via the bank. So the cheque would also be considered via the bank, and we paid 368. And then we make sure we take the money out of our bank account here. Again, this is an asset account which has decreased because your bank balance has gone down. There's money gone out of your bank, so therefore this asset has decreased, and it's gone into the account of J. Watson for the amount of 368. Okay. Okay, so the final transaction is we paid Firelighters Limited by cheque for £820. Firefighters, if you remember from the previous transaction on the 22nd of August, they were our trade payables. So what we need to do is consider first of all the bank account, okay, because obviously there's some movement in the bank account. So we have paid this person £820, so our bank value has decreased, and therefore it's a decrease in asset according to Pearls, and it's going to go on the credit side. Of £820. Okay, that's the credit entry, and the debit entry is going to go here. Because you have paid off this liability, your liability has gone down, your liability has decreased. So 31st of August, bank £820. Okay, so just by looking at this account here, the liability account, if you open this account, you know that you will not owe a single penny to Firelighters, because you owe them £820 and you have paid them £820, so you don't owe any money on this side, and the same applies here as well. Okay, so this concludes this particular transaction, and obviously you can practice if you want to take a picture of them and practice, you can do. They are in your books on page 61, so please feel free to have a go at them. So I'm just going to finally present the whole answer to you. I'll start with the first page of the general ledger. Okay, so hopefully you can see that in its entirety. And then you have, I'm not sure if you want to take a picture maybe. And then you have the second page of the general ledger. Okay. And then you also have a third page of the general ledger here. Okay, so you have the payables ledger, which is here, and you have the receivable ledger, which is here. Okay, so hopefully you found that useful, but the key to anything that you do in double entry when you are studying accounting is Pearls. So the more you recognize pearls, the more you work with pearls and the more you use it and memorize it, the easier double entry will become. Okay, so hopefully you found that useful to help you with double entry if you were struggling with it. Thank you very much.